Understanding your annual benefit statement, 2026. This guide is for members of Bedfordshire Pension Fund who are currently paying into their pension. Your annual benefit statement is an important document. It shows you how much your pension is worth right now, how much we expect it to be worth when you reach your normal pension age, and the death benefits that come with your pension automatically. It's based on the information we held for you on the 31st of March 2026. Let's take a look through it together. Section 1, your personal and employment information. Section 1 shows your personal details, so take a moment to check that everything looks right. If you've recently moved home, you can update your details by logging in to our member self-service portal, My Pension Online. You're also welcome to email or write to us. Just a heads up, we can't make these changes over the phone due to data protection. If you've changed your name or your partnership status, we'll need to see a legal document, such as a marriage certificate or deed poll, before we can update our records. You can upload a scanned copy through My Pension Online or send it to us by email. Because the local government pension scheme is a workplace pension, your benefits are linked to your job. If you're paying into the pension in more than one job, you'll get a separate statement for each one. Each job has its own reference number, which you'll find in Section 1. You'll also see which section of the scheme you are in at the 31st of March 2026. That's either the main section or the 50-50 section, where you pay half the normal contributions and build up half the normal pension. Section 2, summary of your total benefits. Section 2 shows how much pension you had built up at the 31st of March 2026. This is a snapshot of the pension that would become available to you at your normal pension age. The local government pension scheme is a defined benefit scheme, so the figure shown is not a one-off payment or a pension pot. It's your annual pension, the amount you'll receive every year from when you retire for the rest of your life. If you joined the scheme before the 1st of April 2008, you'll also have built up an automatic lump sum, known as a retirement grant. If you joined on or after the 1st of April 2008, you won't have an automatic lump sum. But don't worry, all members have the option to give up some of their pension when they retire in exchange for a tax-free lump sum. For every £1 of pension you give up, you'll get £12 as a lump sum. The maximum tax-free lump sum you could take this way is shown on your statement. One thing to remember, these figures assume you take your pension at your normal pension age. They don't include any reductions for taking your pension early. If you'd like to see what your pension might look like if you retire earlier, you can use the calculators on My Pension Online or contact our team for a tailored estimate. Section 3, your pay figures. Section 3 shows the pay figures we've used to work out your pension, so it's important to check that they look right. These figures come from your employer. If you think they're wrong, you'll need to contact your employer directly so they can look into it. If they've made a mistake, they can send us the correct details and we'll update your pension record. It's especially important to check these figures if you've been on reduced pay while on child-related leave or long-term sick leave. That's because your pension is protected during these periods. It should be worked out using the pay you would normally have earned rather than what you were actually paid. And here's a helpful change. From the 1st of April 2026, this protection also covers unpaid additional maternity, adoption, or shared parental leave. So for leave starting on or after that date, you won't usually need to buy back the pension you'd otherwise have missed out on. Section 4, how your pension has been worked out. Section 4 breaks down how your pension has been calculated. If you joined the scheme before the 1st of April 2014, you were part of the final salary scheme, and the left-hand column shows how that part of your pension works. If you worked part-time before April 2014, your final salary is adjusted to its full-time equivalent, and your membership is based on the actual hours you worked. This calculation also includes any pension you transferred in from other schemes before then. For membership before the 1st of April 2008, your pension is based on 1/80th of your final salary for each year you were a member, plus a lump sum of 3/80ths. For membership between the 1st of April 2008 and the 31st of March 2014, your pension is based on 1/60th of your final salary for each year. both include adjustments if you worked part-time. From the 1st of April 2014, the scheme became a career average scheme, also known as the CARE scheme. The right-hand column shows how your CARE pension has grown over the last year. First, your CARE balance from the 31st of March 2025 is increased in line with the cost of living. Then, your in-year build-up is added. Each year, your CARE pay is divided by 49 if you're in the main section, or by 98 if you're in the 50-50 section, and that amount is added to your pension account. If you bought any additional pension or transferred in another pension during the year, these are included in your in-year build-up and shown in the breakdown. Section 5. Your death in service benefits. Section 5 shows the value of the benefits that would be paid if you were to pass away while still paying into the scheme. If you die in service, the scheme will pay a tax-free lump sum known as a death grant. You can nominate anyone you like to receive it, friends, family, or even registered charities. Bedfordshire Pension Fund has absolute discretion over who the death grant is paid to, but will always take your wishes into consideration, so it's important to check that your nomination details are up to date. You can update your nominations by logging into My Pension online, or by downloading an expression of wish form from our website. You'll find a link in the description below. If you die, we would also pay your spouse or partner a survivor's pension. This is paid to them for the rest of their life and increases each year in line with the cost of living. Section 6. Your estimated pension at retirement. Section 6 shows how much we think your annual pension will be if you keep paying into the scheme until your normal pension age. We work this out, assuming you carry on working your current hours at your current rate of pay. If you'd like to see what your pension might be if you retire at a different age, you can use the calculators on My Pension online, or email us to ask for an estimate. It's worth knowing that you can choose to take your pension from age 55, rising to age 57 from April 2028, although your benefits may be reduced if you take them early. If your normal pension age is after age 65 and you have final salary benefits, an increase will apply to these benefits for the period from age 65 to your NPA. These increases are included in the figures shown. Section 7. The McCloud remedy. Depending on your membership history, your statement may also include a section about the McCloud remedy. So what is the McCloud remedy? When public service pensions changed from final salary to career average schemes, members who were within 10 years of their normal pension age were protected. In 2018, the Court of Appeal ruled that this was unfair to younger members. The McCloud remedy, introduced from October 2023, gives similar protection to eligible younger members. Not everyone is affected, so your statement will look a little different depending on your circumstances. If the McCloud remedy doesn't apply to you, your statement won't include a McCloud section at all, and there's nothing you need to do. If we've completed your McCloud assessment, your statement will look like this. Section 7 shows a table comparing the pension you built up between April 2014 and March 2022 under the CARE scheme with what you would have built up under the old final salary scheme. If the final salary amount is higher, the difference is called your guarantee amount, and you may be entitled to this extra pension. If you have a guarantee amount, it's already included in the pension figures shown in sections 2 and 6, so there's nothing you need to add up yourself. Just remember, these figures are provisional and may change. For example, if your pay or service details are updated, or when your pension is finally worked out at retirement. If you may be entitled to McCloud protection, but we haven't completed your assessment yet, your statement will look like this instead. In this case, any McCloud amount is not yet included in the figures shown. But please don't worry. This doesn't affect your entitlement in any way. Any protection you're due will be applied automatically when your benefits are calculated, and you don't need to take any action. Whichever version of the statement you receive, there's one thing to remember. If you have any previous public sector pensions, please let us know by completing the form on our website. A link is in the description below. I hope you found this video helpful and that you now have a better understanding of your annual benefit statement. If you'd like more detail on anything we've covered, you'll find full notes explaining each part of your statement in Section 8. And if you have any questions, you can contact our pensions team by phone or by email. Thank you for watching.